Melissa, that's right. Warner Brothers Discovery's board has declared that Paramount Skydance's offer is superior to Netflix. This starts a 4-business-day clock, which would end midnight on Wednesday, for Netflix to respond with a new offer. Warner Brothers Discovery says that for now, the Netflix merger agreement remains in effect, and the board continues to recommend the Netflix transaction ahead of the WBD shareholder meeting that is set for March 20th. Now, Paramount responded, reiterating the terms of its increased offer. CEO David Ellison saying, quote, "We are pleased WBD's board has unanimously affirmed the superior value of our offer, which delivers to WBD shareholders superior value, certainty, and speed to closing." Now, Netflix shares were as much as 1% higher in after-hours trading on chances that this deal now doesn't go through. It had sparked some investor concerns. And amid all of these questions about regulatory approval, today, Netflix co-CEO Ted Sarandos was seen at the White House. That's him there. Sources telling us he was meeting with staffers, not with President Trump. No comment yet from Netflix after WBD deemed the Paramount offer superior. Back over to you.
All right, Julia, thank you. Julia Borson. For more, let's bring in CNBC contributor Tom Rogers. He's also a senior advisor to Versant Media, which is, of course, CNBC's parent company. Tom, it's always great to see you. The stock is telling us that investors still worry that Netflix is going to go back in. What do you think? Should it?
It's hard for me to believe that you make a trip to the White House under these circumstances and you're not still in the game. There's plenty of good reason neither of these companies should go forward. I don't think Netflix needs $60 billion of debt with a pristine balance sheet and the kind of growth they have. And when it comes to Paramount, if they truly believe Netflix isn't going to be approved in this transaction, they could wait and have it fall apart and probably pick it up a lot cheaper. But I think they'll go forward. I think we'll have at least one more round, and we got a real auction on our hands.
If Netflix goes back in, do you get much more bearish on this? And we've already seen the stock go from 130 to where it is right now, 130 June of last year to where it is now.
Yeah, I'm surprised at the market reaction after market here with Netflix going up. That suggests that people think that they're going to back out, and I just don't see that at this point. So I would expect another bid from Netflix and probably some downward pressure on the stock as a result.
Yeah, by the way, we should note in the after-hour session, the initial reaction when Julia first broke the story at 4 o'clock that the other offer was superior, the stock was higher. Then it was sort of flat when we started, Tom, and now it's sharply higher.
I just think...
So it's interesting that the change in just the past couple minutes, now people are very optimistic maybe that nothing's happening.
Well, I mean, Tom's calling it right. The stock should be moving lower if you believe that they're now going hard at the White House to make sure they're going to pass regulatory and then do what they have to do. But I don't think that's
We have some breaking news. Julia Borson, what is it?
Well, we have breaking news exactly about this. Netflix just now announced it is declining to raise its offer for Warner Brothers. So it is responding. That 4-day clock is irrelevant now because it has responded just now. That is declining to raise its offer. They're saying the transaction we negotiated would have created shareholder value with a clear path to regulatory approval. However, we've always been disciplined in the price required to match Paramount Skydance's latest offer. The deal is no longer financially attractive. They go on to praise Warner Brothers, and they say in response to this, they say Netflix's business is healthy, and this year will invest approximately $20 billion in quality films and series and will expand our entertainment offering. And they say consistent with our capital allocation policy, we will also resume our share repurchase program. So this is news here. The $20 billion looks like it's probably a slight increase from what they've spent in the past, but it sounds like they are going to put this chapter behind them, unwilling to match the offer made by Paramount Skydance. Melissa?
Julia, thank you. Julia Borson. Look, everybody's a winner. Look at Peace Guy. Yeah, that's higher in the after-hour session because it got what it needed. Netflix shareholders like Tim breathing a sigh of relief here. Netflix shares popping in the after-hours. A bigger spend debt-free, right, on content here. Buyback, Tom?
I've been wrong before. I haven't been wrong on live TV like that before. That explains why the stock is much higher, though. The market got it right.
You got the news just wasn't out yet. None of us had seen it. No. So I mean, the direction on the stock is fascinating. What's interesting is that both companies win here, and that's fascinating. This also comes on within the last 24 hours, we've gotten earnings out of Warner Brothers. We've got earnings out of Paramount. Paramount's TV business looks okay. I mean, in other words, that's the profitable part of that business. And this is a fascinating time in media. I think some of the parts really says it goes higher.
The problematic part here for Paramount is now 80% of the EBITDA of a combined Warner-Paramount is going to come from cable networks. And with Warner's earnings just announced today, their cable networks declined in EBITDA by 27% in the fourth quarter. And that looks like it's accelerating because it was 21% for the year over year, 24 to 25. That means that Paramount, with all the leverage it's going to have and declines in 80% of its business, has a lot of work to do. And that's a very different model, I must say, with my Versant hat on than Versant, with very little debt and a lot of capacity to be able to invest in the growth of these great franchises like CNBC. Stark contrast there.
Julia's got some more details here. Julia?
Yeah, I just want to note, Melissa, that as part of the deal that Paramount Skydance has offered, they will be paying Netflix's termination fee. So originally, it would have been Warner Brothers Discovery would be required to pay $2.8 billion to Netflix to terminate the merger. But as part of its increased offer, going from $30 to $31 per share, Paramount also said, and in addition to increasing our offer, we will also pay that $2.8 billion to Netflix. So Warner Brothers no longer has to pay that. There's another termination fee that's worth noting. It's a termination fee that Paramount Skydance would have to pay if, for regulatory reasons, their deal was not approved. That's a $7 billion termination fee that would also be on the table should this deal not go through.
Except that David Ellison was at the State of the Union, right, Julia? I mean...
Well, that's
I don't know.
Well, we have to note here that Sarandos was at the White House today. So you have to wonder what kinds of conversations Sarandos had with White House staffers that made him think maybe it wasn't worth fighting this or increasing their offer financially when they have these regulatory questions ahead.
Julia, thank you. Julia Borston. What does Netflix's path, Tom, look ahead now that it is free from this? What does it do?
Well, Netflix was on a great growth trajectory. It is far ahead of everybody else. Disney was number 2. Their streaming EBITDA is over 7 times what Disney's is. So they have a great growth trajectory. They didn't need $60 billion of debt and to be highly leveraged given those advantages. I really think the bigger issue for Netflix is how it's going to handle AI-generated content as it gets easier and easier for cheap but professional-looking content to gain viewership traction, and how does all the long-form programming that they're known for contend against that? And the fact that they don't have to make a $80 billion plus investment in Warner that would have been in long-form programming, how much does that free them up to really deal with what looks like the big competitive issues for traditional television ahead? So I think Netflix's path is great going ahead.
So now that Netflix remains pure streaming, Tom, how does that sort of translate through to the rest of the sector? Does it make Disney look weaker, for instance, now that Netflix is free and is charting its course straight ahead?
I think Disney clearly was a winner during this process of other companies being bogged down, and they were probably rooting this would go on for a while and bog those companies down. Now that Netflix has been unleashed from those issues, I think Disney has its own issues in terms of how well it is able to drive viewership, engagement, and the advertising revenue it needs to drive that. Paramount is does have some antitrust issues. What you were saying before is true, I think, in terms of U.S. regulators and how the Trump White House might be viewing this. But let's not forget about European regulators. Let's not forget about the fact that they are consolidating 2 movie studios into 1. They are taking 2 news organizations down to 1. They are taking 2 streaming services and probably bringing it down to 1. And all that has competitive issues that may create issues with European regulators. So that's part of the story is not over.
So Godfather, what else will they be selling off here? In other words, it feels like maybe it's not even antitrust. David Elson's done a nice job, or Paramount's done, and Skydance done a great job of slimming down that company, making it more profitable. We saw that in those numbers yesterday. Is this asset staying as it is? What's now put up for sale?
This is, by the way, footage of co-CEO Ted Sarandos leaving the White House there. This is just moments ago, so this probably coincides with the release going out. Tom?
I would say that certainly they have to consider asset sales, because at close they're going to have 6-7 times debt leverage here, and that's not sustainable. The other way to get that down, of course, is cost synergies, and they're talking about $6 billion in cost synergies. That's a lot of people who are going to be let go. There was some notion in Hollywood that people didn't want Netflix to get bigger because it was going to cost jobs. We're going to see a lot of lost jobs as Paramount has to get its debt down here.
Again, Netflix is walking away from its offer for WBD. Guy, does the stock revisit 130 at some point?
115, and I think we've been pretty consistent now, albeit the stock is going lower whilst we've said it, but certainty, regardless of outcome, was going to get this stock, Netflix, back to that 115 level where it broke down significantly a few months ago. So the short answer is yes, and quickly, every year around May, people graduate from schools.
Sure.
You know
Yes, they do.
Yes, they do.
Yeah.
Well, there's been a graduation here on the set, if I may. Tom Rogers has graduated from stud to badass right before your eyes.
Wow.
Hold it.
That's like
that
a promotion.
Is that a demotion?
Graduation, all in one, like a turducken.
Yeah, exactly.
Just quickly on the charts, Carter. Netflix.
Well, Netflix is a pretty good example of so bad it's good, down 44% from its peak of about a year ago, and almost 30% below the 150-day moving average, and now bouncing. Whether it's news-related or not, it's asymmetrical. I would say upside is much more interesting and available than downside risk.
Mm-hmm. What are your thoughts on Disney at this point?
Well, I have been of the view that this process was drawing light and tension on the intrinsic value of these properties, and that some of the parts Disney is still more valuable than it's trading at. I still believe that. I can't tell you. The key to Disney is this change in management and really some new direction. Netflix, let's not forget, when it was at 130, all we were talking about, it was trading at 40 times. It was no longer cheap,
Right.
and it needed a catalyst. It's bizarre that this is the catalyst to get excited about the company.
Tom, it is great to see you. A badass, as I always say.